Am I very audible? Like, am I audible enough? When you start, Mercy, can you hear me?
I can hear you. Good evening.
All right, good evening. So, good evening, everybody, and welcome to. All right. Good evening, everybody, and welcome to your class on entries. Long-awaited entries. Okay, this is the beginning of the end. So, the whole point of the beginning of the classes, candlesticks, market structure, demand and supply, liquidity, imbalance, all the PDRAs and all of it. The whole point is what? To put it all together to buy. At the end of the day, you want to buy at safe zones, sell at safe zones. So the whole point of this class is what? Entries and exits. That's where everything is going to sum up. So entries are basically putting everything you've learned together. Do you understand? What have you literally learned? You've literally learned structure. You've learned structure. You've learned liquidity. You've learned what? POIs. That's the demand, the supplies, the PDRAs, and all of that. Right? Liquidity, you can sum up the inducements and then the imbalances under that, right? Whatever attracts price, and then market structure itself, right? These are like the three things that you must consider before what you have an entry, or before you say this point is an entry you're buying or you're selling from. Structure, liquidity, point of interest, right? Now we have two types of entries. We have VIX entries and confirmation entry. I think most of you have heard people say, oh, when price approaches my point of interest, I don't look for confirmations. I just enter aggressively. For somebody to say that they enter something aggressively is that they can have like a POI to buy from. POI simply means point of interest, by the way. They can have like a POI to buy from. And then when price comes to that POI, they just place their buy to and buy, just like this. They just place their buy to and buy. But for those people that are not aggressive traders, that they want to wait for confirmations, when price comes to their entry, they now wait for a particular type of confirmation before they buy. Now, this confirmation can either be pattern confirmation or candlesticks confirmation. We're going to deal with that in due course of this class on entries. But today we're introducing entries as a matter of fact. Now, I told you that to have your entry, three things are key: the structure, the liquidity, and then the point of interest. When you're done marking out market structure, you've determined the direction of price for the day. Okay, price is in an uptrend, price is in a downtrend. And then you understand that the most recent break of structure is a form of inducement called structural inducement, which is also the most important or the most powerful type of liquidity and inducement, right? And then the next thing you're looking down to see, okay, where is now the zone I should buy from since price is in an uptrend? This is market structure, price is in an uptrend. So how do I involve myself in this uptrend? Where am I buying from? Where should I set my buy position to from? Where should I look to take buys from? Or if you've established that price is in a downtrend, and then you're asking yourself, where should I sell from? Where should I place my sell to? And all of that. And these are the entry problems that we have. Now, I want you guys to recognize two things. Remember when I told you demand and supply zones, right? I told you demand and supply zones, that you buy at demand zones, you buy at supply zones. I told you the validation for demand and supply zones, right? Now, this is very similar to demand and supply zones. It is actually demand and supply zones, but in this case, we need something else as key before we buy from these demand and supply zones. Let's say price is coming in an uptrend like this, right? And then it creates a sweep. Then structure comes back to create a level of inducement, like structural inducement. This is our typical type A entry. Let me extract it now from this trend. This is what it's going to look like. Same validations that you have for your levels of demand and supply zones, which means that it's in line with the trend, imbalance, this and that, then the inducement pulls back into 50%. The same validations that you have. But this time around, what do you notice? That it is compulsory. For those of you that don't know the meaning of compulsory, check a dictionary. Compulsory is another way to say that it is a must. Do you understand? A must, you must have a level of what? Your level of inducement pull back into 50%. Sorry, your demand zone or whatever demand zone you want to buy from, do what? Take out the previous low. Now, this low can either be internal or external. It can be an internal low that was swept. It can be an external low that was what? Swept. But a low must be what? A low must be swept before you consider to buy or to sell from. Now, these lows that are being swept, right? The sweeping of this low gives your level an extra protection. There are times where you're done marking out discount and premium and you're seeing like 3 demand zones in one discount level. You don't know which one to buy from or to sell from. It is those protected ones because you know that price has already swept the liquidity resting on that level. Do you understand? So at this stake now, it is what of high probability. So this is what our first pattern, which we're going to call what the type A type of entry. Right? We call this what type A entry model, where the price takes out a low, impulsively does what? Puts in a new low, right? And does what? That same leg that put in the new low goes ahead to do what? Break structure. And then gives you what? Structural inducements. And then you're anticipating that price pulls back and what? Buys. This is one. You see that the difference between these now is that you're not between this and your demand zone validation is that the other flow can be there or cannot be there, but the sweep must be there, right? It must be in line with the trend, the same validations, POS, premium and discounts, inducements, sweep, imbalance, all of your thought and your feelings when validating your demand zones are what? Valid. But the sweep is what? Non-negotiable. This is because price taking out these lows gives it what? A level of or a layer of protection, an extra protection. Do you understand? And an edge, right? If you're judging based on previous price action, you find out that what I'm saying is not a lie. And you see the type 2 type of entry model, price is coming in an uptrend, just like this, right? And then it sweeps a low. But then, before it breaks structure, it does something like this. Gives an inducement before it breaks structure. Somebody has asked this question before. What if something like this is how inducement is created? And I told you that we'll take care of it when we get to entries. So here we are, right? This is the second type of entry. You can see that it is different from this one now, that price puts in a straight break of structure before creating an inducement. This one, the inducement level was created before price broke structure, giving us our type 2 or type B type of entry, which if I should extract it from that price action, this is what it is going to look like. This is what it is going to look like. You now anticipate that price pulls back and does what? Price. Now, this particular entry model is of lower probability as compared to the first one. This one has what? Higher chances, higher probabilities of playing out, right? And better. So if you catch an entry model like this, it should be what? It can be taken as a risk entry. But something like this, you need to what? Await confirmations before trading them. Do you understand? Most of the times you need to await confirmations. I'm not taught you guys confirmations, but I will teach you guys confirmations, right? So this one is our type A. This one is what? Our type B. It's typically the same understanding you have with demand and supply zones. But in this case, must what? Take out the low. That is why I taught you guys the demand and supply zones first and all of this, so that putting it all together when it now comes to entry is what is easier for you, right? In line with the trend, everything is what in place. Your validations are in place, but what it takes out what a low before continuing. Now remember that for the greater part of this class, I think the major points from the structure to the liquidity and inducement and all of that that we've been doing, I've been focusing on the 4 hours time frame, right? And I told you that the 4 hours time frame is not your execution time frame, but it is the time frame that what gives you a direction on what you should do. And that is why I told you that when you open your chart for the first time, what do you do first? You go towards to the higher time frame, which is what the 4 hours time frame as I recommended, and you're going to look out for what? Look out for the structural points on that time frame. That is the time frame that gives you what direction. Is price bullish? Is price bearish? That is what the time frame that gives you what your direction. And then you go down to the what we have been able to what get your market structure for the day. Now your entries may not necessarily have to be formed with the 4 hours time frame, because you understand that the 4 hours time frame is a very rigid time frame. In the sense that rigid, it means that what it's not as flexible as the lower time frames, which means that there are times whereby you can be waiting for a demand zone and the 4 hours time frame, and it takes you like 3 weeks for that demand zone to be validated or even mitigated. Do you understand? Like if you're mapping out demand zones on the 4 hours time frame for 1 year, you may most likely be able to map out only like let's say 5, I don't know, let me just say 10 valid demand zones. I mean valid ones that you could have traded from. Do you understand? So it's not a time frame that you as a day trader should be focusing on entries. It's probably people that are swinging. But as a day trader, it's your time frame for validation, yes, but not your time frame for entries. So this particular type A and type Bs, you're typically looking out for them on the 1 hour time frame. But here's the thing. They must be validated on what? The higher time frame. Sorry about that. Let's say now you have what this particular type A entry model, and then price as what? You go to the 1 hour time frame, you map out structure on the 4 hours, price is bullish, and then you go to the 1 hour time frame. This is what's currently what being printed on price. Now the next thing that you now do is what? After marking it out, awaiting price to come to it, you go to the 4 hours time frame. This place that I'm looking to buy from on the 1 hour time frame, is it in the discount of the 4 hours? Or this place I'm looking to sell from on the 1 hour time frame, is it in the premium of the 4 hours? Remember that I told you that what you sell at premium, you buy what at discount. So instead of waiting for the 4 hours to be the one to create what those demand and supply zones, you now buy and sell on the 1 hour, but then validate them what on the 4 hours. So you have this your type A's and type B's on 1 hour, but then you go to the 4 hours to make sure that they are in line with the trend. You can have something like this on the 1 hour, and then when you go to 4 hours, it's in the premium. You ignore, right? You have something like this on the 1 hour. When you go to the 4 hours, it's in the discount. Fine, right? So this time around, you're doing from down to top instead of what top to down. Do you understand? Instead of waiting for 4 hours to trigger before you start looking for confirmations, instead you bring what you wait for them on the 1 hour, and then you confirm that it's safe to buy or sell on the 4 hours. Do you understand? And then if you look at some of the examples that have what these are type A's and type B's, I used what the current market price examples on the pairs on my watch list. This is my star watch list, right? Some of them I think I took like 3 trades here. But then let's look at what happened last week on this particular type of entries. Recognize what the type A, and then recognize what the type B, right? This is what it looks like. Now, if you look at this particular one now, this is a counter trend, by the way, but then it's a good example to show what I want to show you. It's a counter trend. So counter trends, I told you, you're not trading counter trends yet until we take the TPO indicators, right? I don't want you to counter trend. Everything you're doing should be in line with the trend for now until you learn how to counter the trend, right? So this is just for example purpose. It's not something I would want you to try. But then let's say now this is a trend that is bullish, right? If you confirm the bullish trend, and then you realize that what at this point price swept below a low. Now I forgot to mention, which I'm going to mention now, that the sweep can be what internal sweeps, but they must be in line with structure. That's the thing. But it can be an internal sweep or an external sweep. External sweeps are fine and better, but then internal sweeps work as well. But it must be what? It must be in line with structure. And then I told you again that what the best type of these models are what the one that have what structural form of liquidity makes it what of higher probability. Type B works, but type A is what better. Do you understand? And you must be what in line with the trend. Okay. Now let's continue. Price does what? Price sweeps this liquidity at this point, and then that same leg goes ahead to do what? Do something like this. Creates this particular inducement point before what putting structure. This is our type B model that I mapped out here. Inducement being created before price does what? Break structure. That was exactly what happened in this case. And what happened? Price does what? Pulls back to it, buys, and then unfortunately this is against the trend. And the whole news on Friday was a bearish one. So this is like initially what? After this whole thing mitigated the supply zone and had what? Sell. Okay, but then this is what our type B type of model. This particular thing now, you see a demand zone that is in line with the trend, right? The first thing you check now, your validations. Is there an imbalance? Is it in line with the trend? Is there a break of structure? Is there an inducement? Is there a sweep? Important one. You understand? Like you validate it the same way you've been validating demand and supply. Just that in these cases now, you're doing it in the sense of what type 1 and type 2, which are the ones that must what involve the sweeps. You can do it on the 1 hour or on 2 hours, and then when you're done marking out the area you want to buy from, you go to what the 4 hours to validate them. If you still look at what happened on BTC last week, it was still the same thing we had at this point. You can see now price was coming with a series of low, high, low, high, low, high, low, high, right? And then what happens next? If you look at this particular one now, at this point now, you understand that what the most recent break of structure is an inducement. Okay. Let's say you made this price action at this point now. You understand that the most recent break of structure is what? An inducement. So this level is an inducement level. But let's look at what happened. Can you recognize our type A pattern here? Price comes, creates this particular sweep by creating a low that goes below this low, which is what? And then after price went below that low, that internal low, straight run to put in a new break of structure, right? A straight run to put in what? A new break of structure. And after that, what happened? Pulls back to give what? This particular inducement, and what happens? A new high, which is what? Our type A type of entry. And if you validate it based on what I taught you on how to validate demand and supply zones, so you're mapping out from what the higher low to what the higher high, you can see that what the inducement leg pulled into the 50%. This is what non-negotiable. The sweep is what non-negotiable. These sweeps are what protects these levels. Because you realize that there are times you can have demand and supply zones that has met your usual criteria, and what happens, price comes and also still stop you out. Like many times. I know that losses are inevitable in the market. No strategy is 100%. But then when you're losing more than you're making, then that is something that you should definitely work on, right? So these your levels need what? Extra protection. And what gives them this extra protection? When the liquidity resting at that level has been swept. Okay? Something like this now. Price does what? Now pulls back and gives you what? A new high. And you can see plain price. What happens? Price retraces right into, you can see price retracing, sweeps the liquidity resting on this low and does what? Mitigate the entry and straight towards take profit targets. As simple as that. This was a recent price action. Now, this was last week Thursday. Today is Monday. This was on Thursday a few days ago, last 2 trading days. This is what something very recent. Every example I'm going to show you are recent examples, right? For you to understand what I'm saying. Okay, and even if you go back to past data, you still see what you still see the same thing. This is sorry, let me take this out. Let's go to EURNZD and see what happened there, right? This particular pair now, this is EURNZ, this particular one, I took this particular trade. I think it was last week, Thursday. Yeah, it should be Thursday. Okay, Wednesday actually. No, it was correct, I think. It was last week though. Well, if you look at what happened now, price mitigated this low probability demand. You see this demand zone now, there's an imbalance below, there's this, there's that. It's a demand zone that is low probability, it doesn't even have a sweep or anything. So it's something that you'll be skeptical about. But then I told you that when you see demand zones that you don't know what to do, what do? You actually wait for price to do what? To mitigate them and see what it creates with them. Do you understand? So in this case now, price does what? Price mitigates this one. And it starts buying. It starts buying. But then something very interesting happens when price does what? Sweep below that low. Sweeps below the low. And that level that swept below the low does what? Goes straight ahead to putting a new high. I told you, same level that sweeps puts in what? A new high without an interruption. Right? And then you're anticipating that it creates what? The level of inducement that pulls back into what? 50%, which is what our structural inducement, which you can see that was created what? In this level, in this case, when price pulls back what? Into 50% and then puts in what? A new high. Our typical type A what? Entry model. This is our type A entry model. What happens? You execute properly and instantly, right? You place your buy to and you actually buy. Protected level, better confidence, high probability trades, a good win rate. Price come, mitigates, and guess what? You can target whatever you want to target, right? Wherever, internals, right? And then price come, mitigates, and wants straight to take profit target. This was last week's price action as well. These are the things that are currently occurring in the market, not even you needing to go back to maybe way back. These are the current things occurring in the market. Right? If you look at this again now, I think this was NZD-USD. I wasn't involved in this move though, but then it's a good example. Right? This is an example of what a reclaimed block too. The reclaimed block, I told you, reclaimed blocks with the entry model are not exactly reclaimed blocks. Right? They are majorly other blocks that swap liquidity. But then remember that I told you that the reclaimed blocks are the highest siblings when it comes to hierarchy of PDRAs. So they are also good zones to buy from, right? They are also good zones to buy from. When it comes to reclaimed blocks, when a reclaimed block has what a structural inducement in front of it, it is what unstoppable. It is a very good one when it's in line with the trend and everything. I've taught you guys reclaimed blocks. So you can also use reclaimed blocks as your entries or as continuations. I'll still show you as time goes on. Reclaimed blocks as continuations. Like something like this now. Let me show you something that happened here now, just for example's sake. Okay, we had this particular demand zone that price reacted from. This is the demand zone that price reacted from here. You can see using this zone as what the inducement, this particular zone now as its inducement, right? But then let me show you something interesting that happened there. Now this other block was broken with a negligible reaction. This whole thing that happened there. And then after price took it out, right? After price mitigated, took it out, negligible reaction, took it out, mitigated this particular demand zone. It now continued. Then it pulled back into that inducement leg. Do you know this is the leg that served as inducement for this demand zone here? He pulled back into that inducement leg and did what? Put in a new high. This is you using what? Reclaimed blocks as what? Continuations. So reclaimed blocks are also or can be recognized as what? As part of our what? Entry criteria as well, our entry models. When you have, this is what I'm trying to say. Let's say now you have your valid demand zone now or your valid type A or type B or whatever that you're using and price as what? mitigated it now. Let's say type A now that has structural liquidity, and then price comes, mitigates what? This your type A entry. And let's say you are not part of the move, like you are not around, maybe lectures or anything, and then you missed participating in this move. What I'm trying to say is that this inducement level here can serve as what? A reclaimed continuation for you, whereby price was what? Price pulls back like this, and then you're anticipating to what? Keep buying from here and continue if it pulls back. This is you using what? Reclaimed blocks as continuations. All right? And then if your reclaimed block must be your POI, then the structural liquidity is what? Non-negotiable. If at all reclaimed blocks must be your POI, then the structural type of liquidity is what? Not negotiable. It must be present. Right? Just like this, where you have something like this. Price takes out an OB level, pulls back, right? However, it pulls back, but then it must what? It must give you a structural liquidity before coming back to that level. This is what I'm talking about. If you claim those must be your POI, they must be what? Structural liquidity. I think I had something on AUD USD, although it failed. That setup later hit stop loss, but then that's an example, a valid example of what I'm talking about. When I say reclaim blocks must give you what? Structural liquidity. Let me see. So I give this a minute to load. Okay. If you look at this now, this was something that I had an order, but I took a loss on Friday, right? You can see now this particular demand zone. What happened? Price takes it out and then pulls back. Creates what? Creates structural liquidity, right? Takes it out and then pulls back, creates what? An evidence liquidity like this. And what happens? It comes back and then, although it was what? It was invalidated. It is what? A perfect example of how your reclaimed block should be. If you're trading them as POIs, they must have structural liquidity in front of them. If you look at this particular reclaimed block here now on AUD USD, where price swept, right? Price came, took it out. At this point, this one held. This is another reclaimed block. Now, price took out this particular order block, and what happens? It pulls back, breaks structure before coming back into the OB, right? Giving what? A form of liquidity with whatever happened there, right? So even if you're using reclaimed blocks as your entry, they must what? As your point of interest, they should be the ones that have what? Structural liquidity. But for today's class, we're focusing on what? Our type 1 and type 2s. So let's look at more examples. I think this is an example of the reclaimed block as an entry. This was one I just showed you, right? Having what? A form of structural liquidity before it, right? And then back to our type 1, type 2 entry models. I should have something on this one. Okay, this is the trade I'm currently waiting for on CADJPY. It looks like it's missed already though, but this was a POI I was looking to buy from before Friday's price action moved price to the upside. If you look at this now, price swept this low, and then what did they do? Now went up, created this form of inducement before breaking structure, although it finally did what? Put in a structural type of liquidity. But then if you look at this now, this is what? Our type B type of entry, right? Our type B entry model, just like this. This is what? Our type B type of entry, right? This is currently on CADJPY. And if you look at what happened here now, this is also what? Reclaim blocks as entry, but minus the reclaim blocks as entry. If you look at what happened again, we had what? We had our type B entry model internally. Let me take this out, right? Let's say you had missed out the whole concept of the reclaim blocks. Okay, we have still caught this using what? Our entry model. What happened? Price came, in the effort of taking out an order block as an inducement or whatever, price took out what? This internal low, and even took out the external low self to start with, right? Price took out what? A low, and then impulsively, what does it do? It goes to this high, comes back to create what? This level of inducement before what? Finally breaking structure, giving us what? Our type B type of entry. because what the inducement was created before the break of structure, making this what a level to buy from. Remember, this is what it looks like, right? For type B. So this is what our type B entry model. You put what you buy to, and what happens? Price does what? Price comes, mitigates your entry, and then buys. But I told you that this type B, most of the times, they're not of what? They're not of high probability. Do you understand? So that's why you want to wait for confirmations. So even if you're waiting for confirmations on this trade, you would have still caught something proper. How? Let me take this out. Sorry, permit me. All right. Let's say now price has come out to mitigate this trade now that you were not sure of since it's type B and you want to wait for confirmations. Can you see how price created the confirmation after the mitigation on this zone? What does it do? It actually sweeps this low, and then that same point that swept the low goes ahead to do what? Create this point, but then creates this structural low before finally what? Breaking structure, giving you what? Our type B model as what? Your confirmation for a buy. These are recent things that are happening in the markets, recent what? Price action. You can see how crazily they are playing out. Even at this point here now, you can see what happens. The price takes out what this low. Price takes out this low internally. That same point that took out that low goes ahead to do what? Creates these structural points before what? Continuing to the upside to break structure. Our type B model. And then what happens? Pulls back into this point to do what? To buy. This is what our type B entry model. Even if you didn't catch this one, you didn't catch this one, you'd have caught this one. Even if you didn't catch that one, you'd have caught what? This one as well. Right? You'd have caught what? This one as well. Although this one is yet to trigger. Right? But then this is like the level. You see the way that price is moving. These are current price actions. Like current price actions. All right? These are things that are happening. When you train yourself to recognize them, it becomes easier over time. Right? It's the same thing with the demand and supply. It's not really, really complex, or it shouldn't be complex for you. It's the same thing that you see when it comes to demand and supply zones. Just that when you're looking out for them now, the issue when you're looking out for them, you should be looking out for them according to how you look out for the demand and supply. They should be in discounts or they should be in premium if you're selling. Then when you don't do it on the 1 hour time frame, you go to the 4 hours time frame to make sure that what you mark out is in line with what the trend. So if you're trying to buy on the 1 hour time frame using type A or type B, you go to the 4 hours time frame to make sure that it is what in discount. If you're trying to buy using type A or type B, sell using type A or type B, you go to what? To the higher time frame, that's the 4 hours, to make sure that it's what in premium. Let me see if I have an example here. Okay, this one was against the trend, by the way, but it was typically our type B. Give me a minute, please. Mom, your voice is loud. It's distracting. Okay, so this was typically price was in a downtrend here, so it was against the trend. It's not a proper example, but then just because of the purpose of the class, I'm going to use it, right? I told you don't trade against the trend. This is just for example purposes. Disclaimer. Now, if you look at this now, you recognize what our type B entry model. Price takes out what an internal low and does what? Gives this structural inducement for finally what breaking structure, and then what happens? Pulls back into it and buys. Although this is not take out this level because this is clearly in a downtrend, right? It was not safe to take buys. But this is what our type of what entry model. And even if you look at what happened at this point that I mapped out at this here now, you can still see what our entry model takes out. You're unsure of a zone. You wait for price to mitigate that zone, right? And see what that demand zone creates for you. I told you before, when you're unsure, just wait for price to what mitigate and see what it creates. As simple as that. Now, in this case, you're unsure of this point. What happens? You wait for price to what creates. Price comes. This mitigation swept this low, right? And put in what? A high. And even that went externally, came back to what? Create this particular inducement that broke this. What happens? You mark out what? Your type A mitigates and was straight to take profit targets. This is very recent again. I think this was Wednesday's price action. This was I think February, right? This was February's price action. Okay. This one here now was Wednesday. Last week Wednesday. These are what recent things, right? You're seeing better trades on good time frames, right? And at the same time, if you look at this now, I don't know if this one is in line with the trend, but then it's still something that I'm seeing here again, right? This is type B. It may not be in line with the trend, I think. I don't know if this is in premium. Sorry, if this is in discount of the previous leg. But then if you look, just for example, because you see what inducement making this what a zone to buy. Price reacted to it before eventually starting the whole ranging thing. This is what type 2. And then even this particular setup on GBP CHF, I'm not sure I took this. I didn't trade this. It's probably just for examples, right? But if you look at what happened here now, price did what? Swept a low. That same point went ahead to do what? Create this low, then broke structure, and even gave a sort of what trend line liquidity here. You can see this equal lows, this relatively 3 equal lows, and then what happened? Price pulls back, right? Still what? Our entry model, okay? Still what? Our entry model. That's at this point, and then pulls back to what? Buy. It's still the same thing. Recent price actions. These are recent price actions that I'm using to show you examples. If you still extend back into price, you still see that what the same thing works consistently. Currencies, synthetics, crypto as well. This is very recent now on GBP AUD, right? You can see now price takes out what? Price takes out a low. Okay? Price takes out what? This low. This is an external low that was taken out. Why is this? This was an external low that was taken out. This was an internal low that was taking out the price. And then after taking it out, that same leg that took out this previous low goes ahead to do what? To put in a new high. And after putting it down new high, what happens? It pulls back to create what? Structural liquidity that must be what? In 50%. I told you anything you're doing must be in line with the trend. All your validations complete. If there's a plus, let it be in line with other flow. Right? Like if you see this one, and this one was coming from what? A demand zone. You mitigated a demand zone. I told you demand zones that you're sure of can create demand zones that are what? Better to trade from. Okay? So that's why you can still use this as what? Your confirmation. Okay? Now price pulls back into 50% of this price leg. Pulls back into 50% to create what? Structural inducement. This is what? Our type A. You can see it's type A. What happens? You put your buy 2 and you knock it. You enter straight to take profit target, no stress, right? And you can see that even during this continuation, right, these other blocks that price filled, price data came back to reclaim it, right? Price data came back what? To reclaim that level. Even if you had just been using, you wanted to just use what? Reclaim blocks for continuations. Okay? And then continuing price, let me see if I still have something. I think there was something that happened on Gold. I didn't participate though. I saw it today when I was having this low learners class. I just mapped it out. It's still the same thing as our type A. Price takes out this level of what? Higher low. Sweeps the higher low level. Goes ahead to do what? Puts in a new high. Then creates this structural inducement. Right? And even came back again to create with another structural level, giving us what? Our type A model. And what happened? We anticipate that it mitigates and what? Goes to the upside. Type A, type B. But what? There must be what? A sweep. At every time, there must be a sweep when it comes to using other blocks as your entries. When the other blocks now fail, that is when you now start considering what? Reclaim blocks as entries. And I told you that even when you're using reclaim blocks as entries, right, there must be a structural inducement before them. The only conditions whereby you can take reclaim blocks without inducement is when those reclaim blocks are using them as continuations. I'll teach you how to use reclaim blocks as continuation. I showed you examples here already, right? These are the ones that you can just take like that may not necessarily give you structural inducement. It can give you or may not give you. But when you're using reclaim blocks as POIs, when price takes out your order block like this now, and you want to use reclaim blocks as point of interest, right? Those reclaim blocks must have what? Structural inducement or a form of liquidity that price can what? Strip to make it of what? Higher probability. So I understand that this is the first time you guys are, most of you would have been introduced to entries. So I am not, or would not be surprised if there are like a dozen of questions awaiting me. So if you have questions, send it to the question groups and we'll take care of it. But this is just an introduction. Be very sure that as we go in depth, it becomes easier. It's just probably overwhelming because you're seeing it for the first time, hearing these things for the first time. But if you watch it over and over again, with each watch, you pick something. And in the next watch, what you pick another thing, it merges, right? One plus one becomes two only. And then two plus two becomes four. That way, it is what your brain is registering and understanding. So if you don't understand something, I feel like to a very great extent, I try to use examples that are relatable and I try to make sure that these things are what's broken down in almost the simplest way, if not the simplest way possible. Do you understand? So that you can easily understand them. So their record is that when you go back, you're sure to either reinforce what you know or learn what you don't know. Do you understand? Yeah, so there are things that you would get. So even if you think this is quite overwhelming, allow your quiet time to come, right? Sleep, wake up at midnight, and then go through this again. There are things that you must know, whether you like it or not, you must know it. So it's not something that you can skip, right? So you must know it. However long it takes you to, you must know it. So I want you to go back to this class. For those of you that may not necessarily have grabbed everything, go back again, listen to it. Definitely, I'm going to have another class on entries. This is like an introduction, but I need to get in the introduction concept world as well, right? And then if you have any question, send it to the question group. I don't want this particular session to be very long because it is a session that you people I want people to go over. So I don't want it to be too long and overwhelming that they no longer do. Right? For those of you that will be listening to the recorded session. So if you have any questions, send it to the question group and then I'm going to reply that. In the meantime, take care of yourselves and see you